In this video, traders, we're going to look at, are you a delusional trader? Ooh, stay tuned. Hey guys, warm welcome to you. All right, so I say this in the nicest possible way, but you know how I try to deliver stuff. I'm not the sort of guy who goes, you must do this, and if you don't do this, you're an absolute clown and stuff, and you just do like me. I'm not one of those guys. Listen, the way that I kind of approach my own trading is hopefully how I kind of do these videos. Listen, I've been through a lot of this stuff. You know, I've been through a stage where probably, if I was very frank with myself, I was delusional. In the first few years, I thought I knew a lot about trading. I thought I was quite good. I would gloss over a lot of things. We'll get to these points in a moment. And in reality, I was just a very, very poor trader. I was an awful trader in the beginning of my career. I couldn't do anything right. I had no structure, I had no plan, I had no strategy. And it was only through brute force and kind of deciding, hey, you need to do this, you need to do this first, that first. If you want it that bad, you're gonna have to do some serious soul searching and work and effort that I ground my way through. I kind of found a strategy that worked better, then I moved on to the next thing and I increased my size, then I kind of took that extra risk on and made that. It was a kind of a big journey, but it all started really with kind of admitting that actually, you're probably delusional. I know this is a bit of an emotive way to say it, and you know, I don't apologize for it, guys, because sometimes we need just to be grabbed by the throat, metaphorically speaking, and go, listen, get a grip, sort it out. If you want to progress in this career, you're gonna have to do some of the things that you aren't really like to do, that others aren't willing to do. And that's the cold, hard truth of it. You don't want someone to say, oh yeah, you know, do this, you'll be fine, you'll be this and that and the other, and you just keep spinning your wheels time and time again. At the same time, you don't want everyone to say, hey, what you're doing is completely useless, don't even waste your time. There's a sweet spot, there's a middle ground, I think. And so at some point, you know, if you're the type of character, which I guess you are, if you're watching this, you're kind of driven, you're ambitious, you want to, you know, you've got certain personal goals for your trading, you have to take a little hard look at yourself in the mirror and go, maybe I am. Maybe I'm a bit delusional about my ability here. Maybe you're past this stage. Maybe you're the type of trader who's been through this and realized that you perhaps were at the beginning, but now you're kind of on the growth train, and you're kind of learning stuff and improving incrementally, and recognize it's a longer journey. And that's it anyway. But are you a delusional trader? So some of the warning signs. You say that you're disciplined when you break rules. It's one of the big things. Like, I'm a disciplined trader, yeah. But you're breaking rules and you're kind of just forgetting about them. You're like, oh, yeah, I took a few more position sizes than I should have done. That. Oh, I took that trade when I shouldn't have done. And you forget all these little things and you're not that disciplined. And this can come back to bite you, because if you're not disciplined, as we know, at some point, it's like a big rabid dog that comes up, takes a big bite out of your butt, and it's going to damage your account. Is that the worst analogy ever? Yeah, but anyway, you say discipline, you break rules, watch out for that one. Second thing is, you can't look at your equity curve. You kind of don't look at how much damage you've done. Now, let me just put this in perspective. If you have an equity curve that's going lower, I don't like anchoring your progress just where you started trading, because that's to be expected. You know, I'm a big fan of saying, right, this is where, at this point here, maybe you'd lost 50% of your equity. Maybe you've gone from 20K to 10K. Right, we'll start that there. This is where I'm starting from now. How is my trading been with my new process, my new management, my new this? Okay, well, actually it's been okay, rather than always anchoring from there, because you're going to be struggle to get back to there just straight away, and it's going to be demoralizing. So that's the caveat to that. But what I mean is, when you kind of say, I'm a good trader, and you're kind of remembering the last trade that was really good, and yeah, I can do this, but in reality, you're kind of giving back, you know, for every good trade, you're giving back 4 bad trades, and your equity curve is showing that. So you can't look at it, you're delusional, thinking, hey, look at this great trade I've done, but yeah, we've lost 5 trades before we took the great trade. Careful of that one. The other thing is, you don't think you need to do X. And this is something that kind of got me, to be honest. You know, I wasn't as disciplined, nowhere near as disciplined as I am now. When I first started trading, obviously, I mean, just be obvious, guys, you automatically become more disciplined as you progress in your trading career. But, you know, you say, well, I don't need to journal. Well, I don't need to journal. I can just sit in front of the screen. I don't need to do any checklists or anything like that. Yeah, you know what, sounds good, but I can't bother with this. And you kind of dismiss it and think you don't need it. Well, maybe you don't. And maybe at some point you can drop it. And maybe at some point you can journal on a very simple level. Maybe your checklist can be 4 items at some point. But why not do the stuff that costs you nothing to do except time? But even if you don't get the benefit from it, the fact that you're willing to do it, again, is proving or showing your mind evidence that you want this, you want to do it, and you're setting yourself apart from the rest. So I always recommend doing whatever X may be to your advantage. You gloss over obvious dangers to your strategy. Woo, this is a big one. This one gives me shivers when I think about this one. I used to have a strategy, guys, that was, day trading. This was kind of probably year 2, 3, something like that, or day trading, and like, yeah, doing well, but every now and then I just have a bang, a massive blow up, and it was because of hidden danger. My strategy of probably trading way too much, not having a decent stop loss on the day, and then pulling it back, and that happened every now and then. I kind of thought, yeah, I'd always pull it back, but of course there was one day you don't. That's an example of the hidden danger strategy, and I had to address that and go, well, there's a point we need to stop. Damage is fine, but deep damage is not. And then that's where you come from delusional to acceptance and going, okay, well, I'm accepting the fact that I'm okay, I've got something here that's working, but this is a real chink in the armor. If the arrow hits this spot, then it's game over. So why don't we just work on that? That's okay, that's doing okay, you can be profitable, but there's this weak spot here, work on that not becoming an issue. And that's when you kind of go from a delusional to thinking, I'm fine, I'm making money, saying, yeah, you are, but at some point in time, that is going to kill you. So understanding obvious dangers to your strategy. What have we got here? 1, 2, 3, 4, 5. The fifth one is you forget periods of tilt. So you look at your P&L and go, okay, I'm doing all right, but you forget, just kind of I alluded to there, that maybe a couple of times your unrealized was huge, but you got it back. You traded aggressively on tilt to get the money back and it worked for you. And you're living on borrowed time. You're walking for that landmine field. And so again, understanding, recognizing, being, observing objectively what's going on. And I kind of use this analogy a lot of the time, and it works for some and not for others. But the analogy of someone's working for you, they're managing your money. Let's say you're giving them £500,000, £1 million of your money. Like, okay, you're managing my money. If someone has a strategy that has obviously got a very, very high chance of blowing up if X happens, maybe it only happens once every 400 days or something, but you've got a chance, you are going to say, hey, whoa, do not trade that strategy until that is tightened up. I do not want there a hole in this strategy that allows me to blow up the money. That £1 million is not just going to disappear because you can't. I'd rather make less and not have that risk than make more and have that risk. And so it's the same for you. It's like, okay, recognizing that if there's periods of tilt, they need to be fixed. Don't be delusional and say, it doesn't matter. I can always get it back, even if I draw down this. I've seen this with traders, guys. I've seen this. They do well, and they kind of do 50K here, they're down a bit. They're like, oh, I made 180K, I'm down there. Yeah, but you are literally one trade away from going to zero the way you trade. It's deadly. Yes, you kind of saying, oh, yes, look at this money I'm making, I'm doing great. But you're literally, it's luck. It's luck, you got away with it. Can you see that? No. Next thing is bang. Oh, what happened? Well, I had £250,000 quid, but now I've got £5,000. Well, because you had that glaringly dangerous thing there, that's delusional trading. You're gambling. And that's kind of, I'm just thinking kind of from an example perspective, but hopefully you get the idea, guys. Final thing I've got for you, what are we in a sixth? You haven't taken stock of where you are and what needs to be done. And this is the point you need to get to. It gets to the point where you go, right, so whatever I'm doing now isn't working, but I've got some nuggets of good strengths in my trading. I've got some really good things and good attributes, and let me take those and let me put those into this new thing. Let me draw a line and let me work now on a plan and work on habits, work on routines, and work on checklists, and work on journal. Let me put all these things together that I know are generally considered to help. Now, I don't have to have these forever, but if I just start to do this, if I just start to take stock and be objective about where I am and on what needs to be done and where I need to go, then you can really start to make progress. You can start to admit where you are, say, you know what, I'm not happy where I am. I'm not going to sweep anything under the carpet anymore. I'm going to face things head on, but one at a time, I'm going to combat it. And guys, are you a delusional trader? Yes, might be a bit of emotive language, but hopefully that's kind of made you step back if you're in this position and going, you know what, maybe I am. Maybe I need to kind of take a step back here and kind of look at things a little bit better and be a bit more focused about what I'm doing and a bit more honest with myself. Take care, guys. Bye-bye.